got me? I'm good to go, Joel.
Good morning, traders. It is Friday, November 8th. You have about 90 minutes before the come get your pre-market info. We have a today, so I'm going to jump right in. Futures S&P 500 trading up about 2 points to 1747.75. Dow Jones trading up about 8 points to 15,575. The Nasdaq is up about 10.5 points to just over 3,330. Crude oil trading up slightly, actually making a move lower over just the last few minutes. Last trading crude at 94.20 per barrel. Gold trading at 13.09. That's up about $3. We will be getting the non-farm and private sector payroll figures at 8:30 a.m. this morning. Forex Live's Adam Button will be joining us while we report that jobs number. We'll get his take on the data point. Also, we will be having Matt Porzio, VP of Marketing at Intralinks, on a little bit later. Just a couple of quick headlines, and we will jump into the show. Earnings last night, Priceline had earnings, Disney, Groupon, and also NVIDIA. Shares of Disney trading down about 1%. Shares of Groupon trading up about 2%. And a huge range in shares of Priceline last night. The stock has taken back most of the losses that we saw following a quarterly report. I will let the boys get into that in just a little bit. Just a quick check on Twitter. Last trade in pre-market at 44.50. Also, shares of Tesla are continuing lower today, down about 3%. And Salix Pharma is buying Santoris, shares of Santoris. That's Sandy November Tango Sandy. Trading up sharply this morning, about 37%. Dennis and Joel, how you guys doing this morning?
Doing great, Brent. Welcome back, Dennis. Did you straighten out those bureaucrats in Washington?
I tried, Joel. I tried, but I don't know. I think that's tough to do that down there. But had a little bit of fun. The weather, I tell you, a lot nicer than up here in the Detroit area. 63 degrees down there. You could almost went out in a t-shirt. And I come back here, and I got snow and overcast, or at least flurries it was last night when I got in. So I was jealous of
Welcome
their
to
weather.
Michigan Fall.
Jealous of their weather. My S&P futures here, we've got a pretty decent range. 1751 was the overnight high, 1742 and a half the overnight low, and we're stuck here, 1746, stuck in the middle, Joel.
Yeah, kind of a weak rally overnight, but just going to have our traders keep attention at that 42.50, one tick above yesterday's low at 42 and a quarter. Big, major, super five-star support level. Got to hold that, or else we're going to be trading in a 17.20 handle today. Coming back on the upside, not much resistance above the pre-market high, 17.51. Kind of just ripped through that 17.50 handle yesterday, so not a lot of resistance above that 1751.
There was some significant pullbacks across the board yesterday. A lot of your leaders becoming your laggards. But let's just start with Priceline here because holy cow, what a range for this thing last night after they reported. Earnings were $17.33 versus $16.21. But then they lowered guidance. So it got an initial spike off the earnings report and up to where? How high did it get after hours? Right after the report, the news
Uh,
algo.
News algo shot the thing up. Priceline got up over the tents. Let me look at this. Wow, 1072 even. 1072 even, and the pre-market low It's over $100 lower than that at 945.19.
945.19, and that was because they lowered the guidance $7.80 to $8.30. Analyst estimates were up at 839. So they read the headline, they beat, they buy it up, and they're like, whoa, 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 guidance, and they shoot it all the way back down. And lo and behold, we've rallied it all back here anyways, and the stock is now up $15 to 1038. So it's basically almost 100 points off those after hours lows.
Well, what can you say about a range like that, Dennis? I mean, just unbelievable. I can't believe that people would participate in that. You did have some volume trading it also. So people were making the trades. I still look at this 1044 level. We talked about that yesterday on the show. You had several lows in that area. It broke through that yesterday, had a bad day. So we're up $15. I'd call that 1044 to 1050 level your resistance points coming back on the downside here. When you get that kind of a move on the downside, you could look at some of these lows that you had in the issue. But if you want to cover short or you're doing something like this, all you have to do, you got to stick your bid out there. There was a low at a couple lows at 1026 level, then 1013, and then you got to imagine with this kind of range, $1,000 level if we get down there,
Yeah.
nice round number like that. But boy, it's sure hard to make calls and levels on a stock that moves $100 in the pre-market.
It's just so difficult to trade this thing right after the report. Like, obviously, if you have a limit order sitting out there, it gets picked off in both directions here. And I mean, it may have worked for you this time because if you had a limit order to sell it up there, obviously, you had a pretty good sale. If you had a limit order to buy it in the 900s, you had a pretty good buy. But for the most part, it's just a whipsaw. That is an incredible whipsaw when you're talking about 120 points of whipsaw after the earnings report. The one thing that we have been talking about for a little while here is how the leaders are starting to become the laggards. Now, Priceline has come back here nicely today, but some of these other stocks here, like look at Tesla here. Holy cow, since this has reported earnings, this has just been awful. It's one thing after another. Jake, was there another car on fire or something yesterday too? I was there.
Yeah, there was another one of those the videos of the car fires.
Oh,
In this case, a Tesla crashed into a truck that had a trailer hitch on it, and the trailer hitch somehow got under the vehicle. If you recall, the batteries themselves are under the right-hand side of the vehicle on the passenger side. So I guess somehow that dragged under the vehicle and ignited the battery. I guess something to keep in mind here, and this is something that has been reiterated by Elon Musk many times, is that this was a high-speed accident. This is going to happen. Any vehicle that's in a high-speed accident is not going to fare too well. And Elon Musk's comments were that it's still safer to be in a Tesla than a vehicle with liquid explosive fuel in it. So that was the angle that he took. But you combine that with the poor sentiment from earnings, even though the company beat, it still wasn't enough. And then you combine it with this. This is a pure momentum stock. You got to keep in mind that this is not a stock that necessarily trades rationally. This is a stock that trades on whatever the momentum is right now. The momentum is to the downside, and we're seeing two pieces of news drag it down $40 in the last three sessions.
Yeah.
It's incredible.
Yeah, well, 180, 143 we were trading out right before the earnings report. They come out, obviously bashed off the earnings report, kind of follow through day 2 days ago, and now car fire here, and we've obviously now trading down another 4 points here at 135.55. Joel, what are the technicals saying on this thing?
The technicals are saying, "Give me back my 155 weekly puts from last week." Gosh, I'm not
You
going.
gotta go to the monthlies,
I'm
Joel.
done. Yeah, I'm going to them. I'm going to take the weeklies off my screen here. Low in the pre-market, 134. So we'll keep an eye on that level. That coincides. You had a 135 low on August 15th. So call 134, 135 your minor support level. Below that, you had a couple lows just under 130 here at 128.18 and 128 and a quarter. So that's a double bottom. I'll give that 128.20 level 5-star significance. Coming back on the upside, sure some people would like to get out at the mark, get out at the close from yesterday's trading, which was 139.77.
I think if you could get this back up, and it might have a little bit of washout here off the bat again, but if you could get back up and take out that 139.77, get back up over 140, start getting a little bit of positive, because it is, we just lost 40 points here on a stock that a lot of people were looking to buy. A lot of people are short the thing too, obviously, so they'll be looking to bring it in too. So I think eventually we will get a turn here. I don't know when that comes, But it's unbelievable that, in 3 days you can lose 40 points and something. But that's what happens when you got these valuations that are absolutely ridiculous. A little bit of bad news, and the herd starts to get out, and they run each other over looking for the exits. Even on a stock like, we're going to talk about Twitter here in a second, but like Facebook, it was weak yesterday too. Surprisingly, as good as the Twitter IPO was, the other stocks and the social media stocks did not follow suit whatsoever. Facebook actually opened up, got up to that critical $50 level where it's been struggling, but then just sold off throughout the day here, closing near the lows of 47.56 here, trading down just a penny here right now, but this chart's not looking great either.
Right, talked about the $50 level. I talked about that with a few traders and just psychological getting back above that level. 50.18, you got a recovery high on Tuesday, but that was short lived. Really came hard off that level. Let's look at 47.30. 47.51. Those were the lows from Tuesday and Thursday. So call 47.40 your support level. After that, you got the earnings day. The earnings low at 46.50, which I always think is a significant level. That was the day that you had the monster volume. But you look, if you get a close below that 46.50, I think you got a leg down, Dennis. And I know we're not real pattern traders, but what do you see here on this Facebook chart?
I see a little bit of a head and shoulders thing for him, and you
I
have the
can
whole left shoulder there just consolidating in the end of September, just above the $50 level, went all the way up, got up to the whole 54.81 even after hours, and we got up to like $58, which was ridiculous. So the after hours head would be a hell of a lot bigger than the one showing up on this chart. And the right shoulder, all the $50 levels. So you're right, it is starting to form a head and shoulders thing. And like you said, we're not big pattern traders, but that one kind of sticks out like a sore thumb.
Edwards and McGee would be proud of me.
I'm gonna write this day down,
You're gonna
November
write this day
8th,
down?
the day that Joel and Dennis were pattern traders.
Pattern traders. We became pattern traders.
How about the day
And
that
Facebook rallied forever after that.
the day that Facebook died? All the traders were singing.
Yeah, the day. I don't know if that's going to happen here or not. It seems like I still think, eventually there is going to be a turn in some of these, but I don't know. That Facebook chart doesn't look good to me either. You're right. I don't like the pattern. I don't like that it consolidated that long at 50. I don't like the fact that the valuation is absolutely ridiculous on all these things, and we just saw what happened with Tesla. So that is a little bit scary there. And even LinkedIn, Joel, like check out the chart on that one. Same thing yesterday. This thing was just hanging out here for 3-4 days, trying to hold the 220 level. Yesterday was a breakdown, major breakdown, closed near the lows of 211.47. What do you think of this one?
Just another high flyer. We talked about some of the rotation here. LinkedIn has had a major run. We're pulling up the chart here to take a look at it. I believe they had earnings too, didn't they? Was that yesterday?
It was on the October 29th is when
Okay.
LinkedIn reported. They did beat on the bottom line 39 cents or 32 cents, and on the top line 393 million versus 385 million expected, but they lowered guidance.
Okay. We talk about gaps here in stocks, and had a big gap up. I believe off the last earnings in August, you had a gap. You had a gap between 213.48 and 288.80. Now you come down and you filled that gap with yesterday's trading 210.74. Use that as a support point, trading up in the pre-market. So I think you might get a little bounce off this 210 level. A lot of ground to go back up here to retrace part of that move. But I'm looking for a little support here in the 210 area.
I think what's going to happen, I'm just trying to get a feel. And I haven't been trading for a couple of days, so my feel might be off here, so I have to forgive me. But I feel like these things might all have another washout here off the bat, but turn around maybe intraday, like catch a bid sometime. And obviously we have a jobs number coming, so that's going to dictate movement too. But I feel like these things are heavy right now, but I feel like it could be one of those reversal days where these things all of a sudden lose, like LinkedIn goes down, tests the 200, and then bounces and closes positive or something crazy like that. Now, I don't know if that's going to happen. I'm trying to call the actual, not even what it's doing, but the actual day of the trading action itself. But I think there's going to be a washout off the bat in some of these things, and then they could turn around and catch a bid here maybe later today. But obviously we'll see what happens with the jobs number too. Also, I just wanted to highlight Netflix too here, Joel, because this is another one that had a little bit of a weak day yesterday. Had been trying to come back, obviously, since they had reported. It's been trying slow, steady climb there for about 5 or 6 trading sessions, but yesterday kind of broke down here with everything else.
Look at all those lows bunching up here at the 325, 326 level. 325.16 was yesterday's low. Going back 4 or 5 days, 325.19, 325.90. I call that major support here. You take out that 325 level, I think we go down and start trading in the teens. Keep an eye on the double bottom at the 350, 1562 and 1570. Then the lowest we've traded since the earnings in the regular session has been 309.20. Coming back on the upside here, I think things will start to thicken up ahead of yesterday's high, which was 39.67. Perhaps it's a close on Wednesday, 35.63. You might find some willing sellers.
Well, let's talk about it. Twitter IPO yesterday was absolutely insane. I was watching it from Washington just on my iPhone there as I was in the meetings. I was watching the Twitter updates, and holy cow, I don't know if anybody thought it was going to open that high. It ran up over $50, so it went up there all the way to obviously take out whatever $50, and then people are jumping in there saying, "Oh, it's 350," and then just turned around and killed it all the way down to 44. So it went from 44 to 50 to 44, all the way back up, tried to climb until about 3 o'clock. We got back up to 48.65, sold all the way back down and got back down to that whole $44 level again. And now we are trading in the pre-market at 44.
Yeah, I'm gonna be. I'm trying to do some levels on this. It's pretty easy. You have the all-time high and the all-time low, and the all-time high is close. So I'm
I
gonna,
guess it was 45.
yeah, I'm
Yeah,
gonna be doing
44.
some levels on this and tweeting them out, and it should be fun. I think it's gonna be a pretty wild ride here. But my early indications for this thing. First, I'd like traders to be aware of the pre-market low in this thinly, well, not thinly, did trade a lot of volume, but 43.62,
I don't think
43.62 is a low in the pre-market. So we'll be keeping an eye on that level. We got a little bit of a bounce here. We are trading at yesterday's low, which was 44 even. I think that is, you'll probably go up and down through that about 87 times. But below 43.60, the pre-market low, 43.62, not a lot of support down there until 26, and that was where.
the IPO
Yeah, that was
price.
the yeah. I mean, I'm doing the levels early, and that's the if it takes out. No, I'm being a little facetious here. There might be some bids at the $40 level, right? Because we go the whole numbers and half numbers. But
Yeah.
43.62, an important number, coming back on the upside. Let's see if we can get out. People might just say, hey, they've held this. Let me get out at 44.90. That was the close and the pre-market high in this issue. Or it was actually after hours. It just traded up a little bit, but couldn't get over 45.50. So
Yeah.
if you're gonna be a Twitter trader, there you go. There's some levels for you.
When I was saying 44, I meant 45. It opened up 45, got up over 50, came back down, test the 45 level, came all the way back up, came back down to close near 45. So it is trading down $1 here right now. I think you're right. This whole $45 area is obviously, even after one day of trading, is showing some significance here. It was support all day yesterday. They're taking that out. If you do subscribe to the theory where support can become resistance, you might see some sellers coming here in that whole 45, 45, 50 area. And you got to give it some room here. This is a stock that's going to be absolutely crazy. It's going to have another 5 or 6 point range here. If you're going in this thing and only giving it 10 cents or 20 cents, you're not giving it enough. You got to give it you almost got to be like going in there looking to make $2 or $3, risking $1 or $1.50 or something if you're doing the 2-to-1 risk reward ratio. But it's hard to trade these stocks because obviously, there isn't a lot of numbers there. If it starts to break down, we're guessing that support. It's never traded down there before. It's obviously not seeing 26 where the IPO price was. You can say the whole number $40 comes into play, but there's not even options on this thing yet. So like a lot of times we always talk about your whole numbers is when the options come out, those can become relevant because people have potential positions on with those strike prices. But the options aren't even listed on this thing yet. So it's going to be a lot of air everywhere in this thing today. Already trade 240,000 shares here this morning. So, but I do like your number, the $45 level there, Joel.
Okay, we'll keep an eye on that.
Jobs number will be coming out in about 10 minutes here. Just want to highlight Disney's earnings. They also reported there last night after the bell. Your favorite stock there, Joel, the House of Mouse. Disappointed the street here a little bit. 77 versus 76, which is only a 1 penny beat, and and the top line was 11.6 billion versus 11.4 billion. So it looks like, but it just wasn't good enough.
Right, that sold off with the market yesterday.
Yes, it
Closed
did.
near the low here. The spike in the pre-market or after hours, it's even taken it lower than that. 64.95 was the initial
Really?
spike. Yeah,
Oh,
got to
wow.
64.95, and then you did get a bounce back up to 66.50. That 66.50 level as acting as resistance here since that 4 a.m. open. You need to go another 50 cents to get to fill the gap at the 67.09 area. So a couple good resistance points there. Coming back on the downside, you did have four lows in a row at 66. That was obliterated. If you take out that 66 level during the regular session, minor stopping point at 65.5, and then you have the pre-market low at 64.95, Dennis. But you don't care about the earnings. I know you're all geeked up about the new Star Wars movie. Did you did you call your local theater and prepay to get some tickets for the opening?
Oh, you know it there, Joel. December 18th, 2015 announced when Star Wars Part 7 is
Woohoo!
coming out. So excited about that. December 18th, 2015. So just over a year away there. I know Joe's excited over there on the desk too. I'm not sure if he's on here yet
I'm
or
like
not, but
wicked excited, but I don't think that Mark Hamill and Carrie Fisher will be in episode 7, though.
I just got to worry about Harrison Ford. Is he going to have like a walker for this, or how are they going to have him in it?
I know he might not even still be alive then.
What? You guys are talking about Harrison Ford? The guy's in amazing
he
shape.
just made an Indiana Jones movie like last year, wasn't it? He
Yeah,
totally
on
could
your
do Star
side.
Okay, all right.
Wars.
Well, I think there was an episode of South Park regarding that Indiana Jones movie that we don't need to talk about right now.
I think Joe has Harrison Ford in the New York Stock Exchange death pool.
Well, I mean, have you seen Carrie Fisher lately? And I don't even know where Mark Hamill is.
Where is Mark Hamill? I never heard about much about him after the Star Wars movies. At least
That's all he's
Harrison.
done.
Well, I think basically, except for Harrison Ford, the Star Wars trilogy destroyed all of their careers, so nobody could do anything after that point.
May-
Yeah.
Carrie Fisher was in Blues Brothers.
Well, maybe
It
they'll
was an
make a
uncredited part, okay, but she came from a showbiz family, so I don't think she really had to work again after that.
maybe they'll make a very the seventh one. Maybe they'll make one that I finally like.
Come on. You don't like the Star Wars movie? Are you a Star Trek fan?
No, man, I'm not into that sci-fi stuff.
Joel
man.
is actually, I heard he was a Golden Girls fan.
Oh yeah,
You like those Golden Girls?
bring back All in the Family. Anyways, what else are we gonna cover here besides Disney before we take a break and get our guest on?
Groupon. Talk
Okay.
about Groupon here. They reported. You got the report there, Brian or Jake? Do you guys got the report in front of you? Actually,
Sure, let me pull it up.
anyways, what's the after hours? I think it sold off originally, and it's come back here now. It's trading up higher here, up 35 cents right now at 987. So I think
Whoa, what a move! This thing dipped down to under 860 to 831.
holy cow, man! This is the whole theme after hours. I guess it's these whipsaw, tank them 10%, and then rally them all the way back up, following the price line theme here. Wow, that's an
Eh,
incredible move for Groupon.
Ensuing rebound went to 1060. Kind of
Come
just.
on.
I'm not making it up, Dennis. I mean, come on. I make a lot of stuff up on the show, but I don't make I don't make that up.
Charts don't lie. The charts don't lie.
997 was yesterday's high. We're trading just below that level. That's a resistance point. And then also, this is kind of textbook here. The last 2 days' highs was 1043 and 1067. We stopped at right in between there in the pre-market at 1060. So
Do you have that after hours chart? I'm not seeing it there.
Oh, okay. I'm sorry. Let me switch it over here. Yeah, so you can.
We want to enjoy this action here too. We want verification on these moves.
I got
These after
Q3.
hours moves.
I got Q3 EPS 2 cents versus 1 cent estimate, and sales they missed at 595. Analysts were around 615, and then I see Q4 EPS expected break even to a 2 cent gain. Analysts are at 6 cents. So that was lower than expected. And sales in the range of 690 million to 740 million. Analysts around 720 million.
Okay, we're going to take a quick 30-second break here from our advertisers, and we'll be back with N button. Welcome back, traders and investors. We have Adam Button here of Forex Live. How you doing today, Adam?
Great day. Always exciting on non-farm payrolls Friday.
Right, looking for a little action, and we also got Jake here on the line.
Yep, absolutely.
Okay, we got a few minutes here before the exciting jobs number. If you could just give us real quick your educational and trading background, get things started.
Yeah, studied journalism. I was a journalist for a number of years of financial news, and I worked in that for a long time, and eventually just came to realize that there was an edge that you could get from trading from news or from knowing every little bit of information, and kind of leveraged that into more analysis and live analysis of markets. So being very quick, and that's what we do now.
Okay, and that just kind of segue into my second question. So that being the journalist and being on that side, but not being in the markets, is benefited your trading.
I mean, absolutely. To go in cold and trade and try to understand everything that's happening without spending time in it is, you have to put in the time, and that was one way to really have one foot in the markets and not be all the way in or not have anything on the line, and then you'd want to take it to the next step at some point, and here we are.
Forex trading is a little bit different, and just give quick background on that about posting bids and offers. It's really a different market as far as the liquidity, lifting offers and hitting bids, giving up an edge both ways. I mean, is that correct? The structure of the Forex market.
Yeah, it is. It's an extremely liquid market, as you know, and you can get in and out in massive numbers. It's very easy to get extraordinarily leverage, but in terms of bids and offers, there's not a lot different, except the spreads are much tighter because of the high liquidity. So you want what is different. It's 24 hours and it's nonstop. And that can be different for traders. I mean, it's very hard to have positions open at night for some people and be able to sleep with it. So it adds a little bit more stress to trading, but more opportunity as well, because any stock trader knows, being stuck in a trade when they don't want to be can be frustrating as well.
So do you have timers? You monitor the market? Do you have other people that are monitoring the market for you overseas? Or how do you handle that 24-hour structure?
Yeah, we have people around the world, so we hand it off overnight. Guys in England, guys in Australia, and so as the sun sets here, it's rising in Australia, and we just hand it off.
Okay, and are you basing your trade strictly on models that you've predetermined, or is it gut instinct trading, or are you systematic in how you trade these markets?
I mean, a lot of what we trade, we trade all different ways. Technically is a lot of technical analysis in the foreign exchange market. Um, and news is a lot of what we do. Trading headlines. You can pound away on headlines if you have the data quickly. And we're going to see that in a few seconds. Watch the market move and go with it.
Right, SPOOs are just jumping around here between 47 and 49 here. Initial here, we are going red here on the number. We are at yesterday's low, 42 and a quarter. Gonna need a bounce out of this level here. So, Jake or Brent, you got the data for
Yeah,
us?
yeah. Let me break in with those boys. Non-farm payrolls for October coming in at 204,000. Economists were looking for just 120,000. The private sector, 212,000. Economists were looking for just 125,000. Unemployment rate ticking up to 7.3%. The quick revisions for September on those numbers for non-farm revised higher from an initial 148 to 163,000. And the private sector revised higher from 126,000 to 150,000.
Okay, so what kind of movement did you see on that? Obviously, the S&P shot down here. What kind of activity did you see in the foreign currency market? And was there anything that you got triggered? Do you have any positions that were covered or initiated off that news?
Yeah, we're seeing a lot of U.S. dollar strength. It's the same, I think, trade we're probably seeing in stocks as a taper trade. But what's really interesting to point out is that the participation rate. You see, unemployment ticked up to 7.3%, but the participation rate plunged about 4 ticks to 62.8 from 62.3. And barring an unchanged participation rate, unemployment would have been around 7.6%. So there's some weakness there. But what's interesting to note is there's two surveys. You have an establishment survey, and that'll give you that 204K, that strong number in jobs. And you have a household survey, which is where they survey homes about who's employed. And there were some different methodologies about the furloughed workers from the government, and they didn't count in the establishment survey, and they did in the unemployment survey. So what do you take away from that? It means this participation rate number will probably come back up. Unemployment rate is probably a fair estimate of where we really are. And these jobs numbers really are strong in these private payrolls. So, if stocks are selling off here on a taper trade, I don't know how long that'll last. I mean, a strong economy adding 212,000 jobs, and the revisions are, they go back a few months and add about 60,000 jobs there. So this is a very strong employment report. It's great news for the U.S. dollar. And we're seeing that right across the board.
Right. So with participation rate, that's people that dropped out of they just totally gave up.
Yeah, that's what it would indicate. You have 4 ticks coming off on that, and it's hard to understand why that would be happening. But maybe it's furloughed workers saying they're not looking for work because they call and ask you, well, are you looking for work? And maybe a furloughed worker would say no because they expect to come back to their job. But that's a real puzzle at the moment to try to understand why that's a dramatic fall. I mean, it would normally take years. But in general, it's very low, the U.S. participation rate, and really lower than demographics would indicate.
Right, in the S&P futures, I notice a lot of times. I mean, you did get that scattered activity right before the number. You got a couple pops up here, but a lot of times, right when that number comes out, the liquidity is gone. Basically everyone just pulls their bids and offers and waits for that news to be disseminated through their co-located servers. Is that kind of the way it is in the foreign currency market, or are people, are they a little bit stronger? Do they display some liquidity during events like that?
Yeah, it's the same right across markets. It's a dangerous time, and if somebody wants to have a little bit of fun in the 5 or 10 seconds before non-farm payrolls, they can move the market. Now you can move it a few points in S&P futures. It would be maybe 1/10 of a cent in the foreign exchange market. But if you have your stops there, it can be very frustrating as a trader. So either you widen out your stops or you flatten out and then try to trade the headlines.
So you're talking about stops in the foreign currency market? I mean, you're talking they're not actually they're actually you have to wait and watch them executed. You can't actually place physical stops in the market in the
Like,
FX market.
oh yeah, absolutely you can. With your broker, you just put a stop loss order in wherever. You have stops, trailing stops, any sort of exotic kind of stop. I mean, the liquidity is so huge, you can do whatever you want, and you'll get a fill.
Okay. Okay, but it's not like an exchange where the order is sitting there. It's something that when the price is hit, then the order is sent, right? There's not like a book.
Yeah, that's right. The technology would be a little bit different. But in effect, it works out to being the same. I mean, you can have some slippage, but I guess it's the same in the stock market if you have a gap down in something or other and it just doesn't trade there. But mostly you can get a fill on anything.
Okay, do you have some favorite currencies that you follow, or spreads, or what do you rotate around depending on the news out of a particular country, or do you pretty much stick to the yen, the pound, Swiss franc, whatnot?
Yeah, that's really where it is. You go to where the news is, the euro as well, Canadian dollar, Australian dollar, New Zealand dollar is very well traded as well. And those would be the ones where you see the sort of movement. For a lot of currency traders, it's tied in a lot to what stocks are doing. I mean, dollar yen or euro yen, it tracks the stock market very closely, or that risk on, risk off trade. And then a lot of other traders like to follow the news. You had a crisis in Europe over the last few years. The Swiss franc being pegged to another currency, or sometimes you have Australia is very tied to China. So wherever you think you can get an edge, or where a chart sets up in a way that you like or feel comfortable with, because you not only have all those currencies against the dollar, you have them against each other as well. So it adds another dimension there. And then a lot of currency traders trade gold and silver and oil as well.
Right.
Hey Adam, just Dennis here popping back on there. Did see just to talk about the jobs action there. I was trading the equities against the indexes there just now, and what you saw like was the weak number there to knock down the equities, and that index was trading down about 8 points there at one time. The one thing I did notice is that the equities, the stocks themselves, were not really following. So actually, we've turned around and we've actually popped off those lows. Now we got down to 1736 and a half. We're up at 1741 here. What are you seeing now in the currencies there, Adam? Are you seeing any reversal here? Because we just saw a reversal in the futures here.
For the dollar, it's a little bit. It's sticking with it a little bit. We're seeing that retracement as well. It's especially dollar yen coming back a little bit, euro yen, but it's the same sort of pop and then fade, and we're trying to
Yeah.
sort out. You've kind of different dynamics with the unemployment rate and the change overall. Um,
Now, do
that's
you
what,
trade these whipsaws too sometimes when you see these things overshoot and undershoot? Because it seems like every time news breaks, and I'm assuming it's the same on the currencies too, is that you do get like this initial move, like almost like a head fake, and then you get it coming back in and retesting. Obviously, as a trader, these whipsaws can be pretty good to trade if you can catch them on the right side. Do you try to capture those little currency moves here too,
yeah.
or are you a little longer term?
No, absolutely. With moments, and it's tough to trade on the initial headline if you're a retail trader because a Bloomberg terminal or whatever an
Right.
algorithm will get it before you. But that second move tends to take a little bit of analysis or some deeper thinking, and that's a lot of times you'll get the move, you'll get the bounce, and you can either fade the move or you can hop back in and for the second move. Otherwise, you're just sort of with a number like non-farm payroll, just gambling on whether you think it'll be strong or weak. And sometimes you can have an edge. Sometimes the market won't want to break a certain level, and you can trade that way. But it takes all kinds.
Joel, you still kicking around there?
Oh yeah, you did make a good point when the market was selling off. You were just a little just looking at the S&Ps. You made the comment that we were selling off on the taper trade there. You weren't too sure how long that was going to continue. We did get a little bounce off that. So let's just kind of look out a little bit more macro here. Everyone is on the edge of their seat, worried about the taper, the U.S. interest rates. Could you just give us your commentary on the rates in the short term? Is this kind of economic data strong enough to warrant a taper? Will the Fed ever taper? And what will be the reaction in the market when they actually do start to taper?
Well, it was nice because in June when we had Bernanke give the strong hint about the tape, we kind of saw what was going to happen, and it was going to be a stock market sell-off. But I don't think even then, if the Fed had tapered, that the market is going to be definitively lower, going to continue lower. This is just a market that wants to go higher and higher. It's just multiple expansion in the stock market. The U.S. economy is still relatively strong. American multinationals are levered to emerging markets, and the U.S. housing market's recovering, and that's giving consumers money to spend. So from the macro perspective, right now we have to. It's scary a little bit to buy stocks until you get a clearer signal about what the Fed's going to do. I mean, with a number like this, you could see a taper in December. But the Fed is a little bit opaque right now. They could have certainly tapered in September and they didn't. And it's tough to decide where to be on that trade until you get a little bit of clarity. But this is a good number. These private numbers, private jobs, as you mentioned, were especially strong, revisions strong. And I wouldn't worry too much about the unemployment rate. So along with it, we had personal income, personal spending numbers as well. They were strong as well on personal income. So just great news all around.
Adam, what about long term though, when the Fed does eventually actually taper here, because they keep kind of pushing it down the road here? We know it's coming here eventually. I was in DC yesterday, and I was with the CFA Institute there, talking with a lot of different analysts, and they all have the same consensus that when they taper, this market's in big trouble. I just wonder if everybody's just thinking that though, and it's almost like everybody's expecting, that they're going to taper and then it's going to die after that. Do you think that's actually going to hit, or has the market priced, an eventual taper in here already?
Yeah, I think the market wants to kick and stream. I mean, it's that sort of heroin analogy where it's a junkie and it wants the taper money. Whether it means that much, to the underlying market, I don't know if it does. But we are going to get that sell-off at some point, and I think you want to buy it just for the reasons you said. It's a little bit priced in already. It has to end eventually. And, the Fed has shown now that it will be so cautious. If the market tanks on a taper, that'll be the end of the taper for a long time. If rates start to go up, they'll knock them back down. It's just the Fed has always been in your corner in the stock market, and they're not going to taper and just keep tapering and crush the market. It's hard for me to believe that would happen. I mean, Yellen might be different than Bernanke, but I think she's cut from the same cloth. So we'll see.
Okay, for people that are interested in becoming a currency trader, what kind of advice or background? What should people do, or what are your steps that you see successful traders take? Books, courses, or what's the way to get started in foreign currency trading?
Yeah, it's really not that much different than stocks. If you're someone who likes to be in and out very quickly, keep costs down, it's a great market to be in. If you're someone who's interested in the news, it's great. And someone, if you really like a lot of information, I mean, in the universe of stocks, you have tens of thousands of stocks at any given time. In currencies, you really have 7, and the coverage on all of them is incredible. You have economic data, you have news all the time. You have so much technical information in the market. So it's a great community of traders. It's people who are very professional, and it's a good place just to learn about macro, to add it a little bit into what you're doing. And I think with ETFs for stock traders, that's a great way to get into it. You have very simple ETFs on all the currencies, levered ETFs. Or
could you give me a symbol of one of those to put up for our viewers?
Yeah, a lot of them should start with FX. So FXE is the euro. That would be long the euro. FXY is the yen. FXC is the Canadian dollar. FXA, Australian dollar. Those are all simple long ones, and you can look up the tickers on on short ones or levered ones or different sorts of plays on those. Some are listed around the world, some are listed in England, but those ones I mentioned are all North American listings. And so, those are a good place to start. And if you trade on the Nikkei as well, if you're getting into foreign equities, you have to manage the foreign currency risk there as well. And there's some ETFs that help do that, and that can really add to your returns if you take the currency risk and the equity risk as well.
And that's a good point there. I just wanted to mention too, because I'm actually Canadian. I trade the U.S. stocks. I trade for Bright Trading, U.S. company. So I'm always making U.S. dollars. And I'll tell you that currency risk can just be absolutely enormous. And now the Canadian U.S. dollar isn't really in the last couple of years a big mover there, so I don't have to hedge as much. But going back a couple of years ago when we were bouncing around, it was crazy. Like all of a sudden, the currency Canadian dollar would strengthen 5% or something, and all this money that I've made in the U.S. I got to get back to Canadian, and it's unbelievable how much your or holdings can move around. So sometimes, you can get in a situation where you actually make 10% on a stock, but if you don't manage the currency risk well, you can actually lose money when in your own currency. So it's a great point. Like currency moves can really affect your overall portfolio positions when you're trading overseas stocks.
Do you trade these ETFs at all, or are you pretty much in the open foreign exchange market?
Yeah, for the most part, open foreign exchange. But with my retirement accounts, you'll have some stuff and you'll want to manage the currency risk. Some of those hedged ETFs or anything, absolutely, I definitely would use some of those. Sometimes you'll just, you'll want to see something, and they're very easy to get in and out of as well, and they track the market, perfectly. The fees are very low in all of them. So they're a handy way just to get a little bit of exposure to currencies, and then if you want to get levered up and get involved in trading currencies, it's sort of a bit of a gateway.
Okay, we're on with Adam Button here of Forex Live. He was nice enough to be with us during this unemployment report, which had spooked the market here a little bit. The S&P futures are heading south here, down $6. We did make a low at 36.50. I want to alert our traders to the low that we had on October 23rd. That was 1734.50. So that's going to be the major support level that we need to hold. I don't see any other questions coming out of the chat room. Adam, thank you very much for being on the show, and it was fun to be on with an expert during the job numbers. So we will like to have you back again if possible.
Yeah, I'd love to do it anytime.
Okay, thank you.
Thanks, Adam.
Cheers, guys. Nice to talk.
Cheers, thanks.
Okay, we're going to move it over to Mighty Joe Young here with some morning headlines.
Oh, well, thank you very much, Joel, and thank you to Adam Button for coming on the show today. I'm just going to do a little headline sandwich here between Adam Button and Matt Porzio, who's expected at 9 a.m. Today's headlines from around the world. Coca-Cola said it will invest over $4 billion in China and build new plants between 2015 and 2017, according to Reuters, to counter competition which is chipping away at its share of the country's 420 billion won, 69.12 billion US dollars soft drink market. The investment will add to the $4 billion that the world's largest drinks maker has earmarked for China between 2012 and 2014, said Asia-based spokeswoman Sherilyn Choi, confirming a Bloomberg report earlier today. The beverage maker is also open to deals with local firms, Choi said. Analysts said this could help it play the trend in China toward more local-style herbal teas and healthier drinks. Declining sales of high-end cameras and lenses are raising an alarming question for companies like Canon and Nikon. Could be the proliferation of camera-enabled, app-heavy smartphones be crushing not only the simple point-and-shoot, but premium models as well. This year, shipments of what's called interchangeable lens cameras are diving suddenly after years of robust growth. Most of those are digital single lens reflex or DSLR cameras. During the past few weeks, Canon and Nikon both lowered their forecasts for sales in the fiscal year ending in March. Major lens maker Tamron, seen as a bellwether for the market, sold 22% fewer interchangeable lenses in the first 9 months of 2013 than it did a year earlier, forcing it to lower its profit outlook last week. The White House has thrown its weight behind a proposal to raise the federal minimum wage to at least $10 an hour. The president has long supported raising the minimum wage so hardworking Americans can have a decent wage for a day's work to support their families and make ends meet, a White House official said. President Obama, the official continued, supports the Harkin-Miller bill, also known as the Fair Minimum Wage Act, which would raise the federal minimum wage to $10.10 an hour from its current rate of $7.25. Engadget reported that Panasonic's 20-inch 4K tablet comes to the U.S. in January at a price of $6,000. With a projected 2-hour battery life, you probably won't be using this on the go very often. There's an optional desktop cradle and carrying case, but even with its incredible 20-inch size, it's about 0.49 inches thick and weighs 5.27 pounds. If you're a professional in the video production, architecture, design, photography, and healthcare fields who can expense this $6,000 slate, you're probably already sold. After 2 straight profitable quarters, Sony's chief executive office shocked investors last week by reporting an unexpected second quarter loss that derailed the company's rebound from $8 billion in TV losses. Sony cut its forecast for televisions, cameras, and computers, businesses that make up 22% of its sales. Shares plunged 11%, and Moody's Investors Service warned the credit rating may be cut to junk. The U.S. Food and Drug Administration is beginning a process to ultimately ban the use of artificial trans fats in processed foods, saying the fats are no longer generally recognized as safe for consumption. The agency announced on Thursday it was taking steps to require the food industry to phase out the use of partially hydrogenated oils, which are the primary source of trans fat in processed foods. FDA Commissioner Dr. Margaret A. Hamburg said eliminating artificial trans fats would help protect Americans and could prevent as many as 20,000 heart attacks as well as 7,000 deaths from heart disease each year. Mattel is making a new effort to sell Chinese on the impossibly proportioned Barbie doll, with an appeal to tiger moms who would rather have their children reading books than plugging body parts into Mr. Potato Head. New low-price offerings include violin soloist Barbie, complete with bow and sheet music. Mattel is targeting education-minded parents who education-minded parents such as Lo Chongzong, who watched her 9-year-old daughter Yang gaze at the $61 fashion design Barbie playset during a recent visit to a Beijing Walmart. She loves those dolls, but I had to stop buying them because they distract her from her studies, said Mrs. Lo. She'll spend hours braiding her hair, dressing, and undressing her, the mom said. And that wraps up our headlines for today. I'm going to send it back over to Brent over here, who will help us right before we bring on Matt Porzio.
Yeah, I'll help you with something, all right. Let me look through our list of ratings really quick here, give you some of the top upgrades, downgrades. Let's start with the downgrades. Why not? You know, I usually start with the top upgrades. Switch it up today. Go with some downgrades.
It is Upside Down Friday, so that sounds totally
Upside down
on point.
Sweet. Okay, I see Nation Star downgraded at Stern AG and also at Morgan Stanley. Morgan Stanley now with an equal weight rating. Equal weight rating, that's very hard to say. Bank of America downgrading Deere from buy to neutral. Goldman Sachs downgrading Whole Foods from buy to neutral. Got a couple of downgrades on shares of Tremor Video this morning. That is Tango Romeo Mike Romeo. See downgrade from buy to hold at Canaccord. Also a downgrade from Oppenheimer. They're putting a perform rating on. And Barclays downgrading United Continental from equal weight to underweight. That was related to a pair trade. Let me find the other one. They upgraded Alaska Air from underweight to equal weight. So Barclays advising a pair trade in the airline space this morning. Also on the upgrade side of things, I see an upgrade from Needham on SolarWinds Sandy Whiskey Yankee, or that is Sandy Whiskey India from hold to buy. Shares of Lloyd's were upgraded from hold to buy at Investec, a Eurobank, and Goldman Sachs upgraded shares of Peabody Energy from neutral to buy. Oh, we got a lot of upgrades today. Dang. Monness Crespi and Hart did upgrade Priceline following those results. See an upgrade on Scott's Miracle Grow from BMO Capital. And MainFirst did upgrade shares of Transocean from underperform to outperform. That is a couple notch upgrade. Let me check the new coverage, see if there's any notable new coverages. I bet there were some Twitter calls this morning. I see Wedbush making a call on Twitter, setting a neutral rating and a $67 price target. And an analyst at Hudson Square initiating coverage on shares of Twitter with a sell rating. So you do have your first, I think that's your first sell rating on Twitter. Let me check that really quick, make sure there's no other sells.
Didn't Pivotal downgrade Twitter just yesterday to a sell?
Pivotal did slap the sell on yesterday. You're right, Joe. Thank you, sir. I think we're going to take it one more really quick break, get Matt Porzio on the line, and we'll be back with you in just a few minutes.
Hey, Matt, how you doing? Welcome back, traders. I am on here with Matt Porzio, Vice President of Product Marketing at Intralinks. How you doing today, Matt?
Great. How are you?
We're doing okay. We kind of had an exciting morning here with the unemployment number and had some activity, but now we're going to switch gears here a little bit. And before we do that and we get into the interview here, could you just give us a little bit of your educational background and market background?
Sure. Yeah. So education, graduated from Colgate University with a degree in history and soon started in iBanking in the late 90s. Right after that, down in Charlotte. Spent some time in equity capital markets up in Baltimore. And then directly prior to joining Intralinks to build out this M&A virtual data room business here, I had worked for a German mid-market advisory firm called Metzler, doing cross-border M&A out of New York. And for the last 10 years, I've been with Intralinks on the other side, really changing how investment bankers do deals and leverage technology in deal making.
Okay, so you mentioned investment banks. Is that primarily who your clients are? Is it the brokerage firms, investment bank, private speculators, or who are pretty much the clients of your company?
Yeah, so our client base is pretty broad. I mean, if we just kind of define what Intralinks is, it's a trusted, collaboration platform for business professionals. And what we pioneered as a software as a service technology 16 years ago was this virtual data room concept that supported highly regulated, complex, strategic transactions. And so mostly, all the major investment banks are our clients and our users, but also all the major corporations that are active in the M&A or financial transaction world, whether it be debt capital markets, M&A. But we're also branching out into other areas where people are just using our platform to securely collaborate around their business. So we've got about 99% of the Fortune 1000 using our platform right now.
Okay, let's get right into the deal flow indicator. How long has it been active?
We've been doing this for the last 4 years. We recognize that as a leader in this market, we had a significant share of M&A activity, and we were seeing all these, early stage M&A deals about 6 months before they were publicly announced by a source like Thomson Reuters. And so we had this early view and this unique view into global M&A deal activity as it was just starting, as it was getting into that due diligence phase and leveraging our platform. And so, we had constant asks from, the bankers we were meeting with, well, what are you guys seeing, broadly, globally in the market, by region, by industry? And so we started producing that data. And if you think about it, it's analogous to how ADP payroll data, helps predict employment trends. It's at that same level.
Do you find there's a higher predictability by region or by sector?
Yeah, I think regionally, there's definitely, we've seen more consistency and higher predictability where the adoption of online due diligence or virtual data rooms is highest, right? So in more mature markets like North America, where we started the business, but also Europe, obviously, the usage of the technology and the adoption of that technology for deals, and even just the size and scope of those deals that go online, it gives you a little bit better predictability. But I'd also say in emerging markets like Brazil, where we're involved in nearly half of the announced deals, the predictability is proven out as well.
Okay, and are there seasonal patterns to it as well? I mean, now we're winding down to the end of the year here, and a couple months left before the new year. Is there obviously no one's going to be rushing to get done, deals done by the end of the year? It'd be pretty quick, but have you noticed any seasonal patterns?
Yeah, as I mentioned, with that 6 month lag between sort of deals that start leveraging, technology and due diligence before they get announced, and that's an average, right? Some of the deals move faster, some of the hairier deals take longer, but since really the global financial crisis, which threw everything out of whack, we've seen what I would term the spring flood, right? Deals after everyone comes out of a bit of hibernation period in the first quarter. By mid-year, people are bringing deals to market with the anticipation of closing by calendar year end. So the last few Q2s, we have seen a significant uptick in sequential deal activity. We saw it again this year. And so, there's that flurry. And if you look at, like the Thomson Reuters announced data from last year, there was a significant sequential uptick in Q4 announced deals, which is what we saw in Q2.
Okay, well, you can't give us the secret sauce of the deal flow indicator, right? You got to keep that proprietary. But um, what what kind of role does social media play in this? You have the Twitter IPO, you have Facebook, and obviously these companies are making money by the data that they collect. Is social media play a role in your deal flow indicator, your predictability?
Well, it's interesting, and social media related to Intralinks and the use of technology and M&A is, information sharing is powerful, right? And social media is a powerful way to communicate amongst even business users. But at the same time, in the M&A world, right, you're trying to control the flow of information, especially in due diligence when you're talking about the lifeblood of a company, right? The information of employee data, projections, your strategy, that's data that people put on our system in due diligence to keep secured. Now, the truth is, if you look at some of the research out there, social media is being used today to leak deals, right? And some people in the industry believe that, leaking deals actually benefits valuations and actually helps create shareholder value by making sure, the processes run right, all the potential bidders know about it and can jump in. But at the same time, that use of social media, it can get quickly out of control, right? And it can jeopardize the negotiations on deals. A more important trend that we're seeing is what I would call social deal making. So we've got a network now of 2.7 million users, and we've got pretty much the who's who of the deal making community. And what they've always said to us is, right, we're kind of trapped in these virtual data rooms doing M&A deals. How can we interact through a secure use of technology? How do we interact only with the qualified people, not the broad LinkedIn groups with, hundreds of thousands of members who can't really talk about deals or help execute them. And so we built a platform recently that does that. It allows bankers to find more global buyers, and it allows the buy side to source more deals than they could from going to conferences, doing traditional meetings. It's just a way to accelerate that. So I think there's an intersection between social media and deal making that's happening right now.
Okay, is the deal flow indicator, is it a dynamic model? Are you constantly changing the components and tweaking it, or is it a static model where you have your inputs, you put it and you stick with them and follow the results from it?
Yeah, it's consistent in the sense of what we're measuring, that we see in the market, right? So it's deals that are, investigating using our platform, and they may choose another platform or ours. But we're seeing a significant portion of that deal flow, and we're just including, what we would call strategic transactions, asset sales, divestitures, you know, uh, early stage capital raises, joint ventures, those types of strategic transactions. And we measure that, that consistent set of data each quarter. And what we do is we show the sequential change in deal flow. And again, this is the volume or number of deals. And then we also show the year over year stats. So it's
Okay, and
pretty consistent.
Going over, regionally, I mean, you cover the U.S. markets, or also, global M&A activity. We've had a strong year over year in the European markets, global activity. Do you think that's going to continue, or do you think North America is going to kind of pick things up next year?
Yeah, what we've seen over time, and if you look at our data, it tends to ebb and flow, and eventually, the global markets around M&A tend to balance out. Our most recent, our Q3 deal flow indicator showed Europe, in particular, having the highest year-over-year increase at 35%. What we saw sequentially is more of a leveling off globally, but a region like Latin America was the only region that we saw sequential growth in M&A activity. I think what you're going to see going forward is, you're going to see a lot more announced activity towards the end of the year in Europe. And what the trend has been is, as you see announced activity, deals beget more deals. People feel like they don't want to be too late to the party or miss out, so they tend to rush in, and then they realize that either the good assets have been already purchased or cherry picked, or valuation gaps are starting to increase again, and people don't have the right expectations, which means they will shift more to a region like North America, or to even Asia Pacific.
And How's your business affected by our buddies there in U.S. Congress, as far as the finaglings over the debt ceiling and stuff? Does that have negative consequences for U.S. activity as well as global deal activity?
Yeah, it's interesting. Anecdotally, my job's to be out there talking to our client base of corporate development heads and investment bankers and private equity individuals, and what they said is, listen, M&A is a little, right now at least, the market is a little longer term thinking, right? We've got confidence returned, to those executives that, hey, I can't sit on my cash, my large balance sheets anymore. Interest rates are good right now. I've got to be in the market, and I've got to be looking to build long-term growth and do the inorganic growth route. So while it has an effect, I think it's more of a negotiation tactic, frankly, that we're hearing people use, of why they might accelerate or slow deals, or shave some numbers off the valuations that they're going for. But in truth, it's not going to stop the overall M&A market. It's going to take a bigger, longer sustained, what I would call crisis, to stop the trend of deal flow. All the fundamentals are there for a strong M&A market, and we're starting to see that in our business.
And that goes kind of the point that you made there about what to do with the cash. So, like when Mr. Buffett, takes out like a Heinz Corporation or something, is he looking at that as just, there's a stable business, there's cash flow, he's just going to incorporate that into his portfolio for increased cash flow? I mean, because you can't you can't create new ketchup. I mean, they created that green ketchup and it didn't go over very well. Maybe for St. Patrick's Day. But what's he looking for in his deals?
Yeah, I think broadly, when you look at the motivations behind some of these deals, clearly some of them, it's just there's a dislocation in value, and people want to try to extract that. And I think that's probably someone like Warren Buffett has done a great job over the years doing that. I think what we're seeing more, though, is less of these big deals driven by the ability to sort of just make money from the private equity investors, but more of a strategic M&A, of people looking at regions, expanding globally, developing new product lines, right? I think while the Twitter IPO was a great success, there's a lot of companies, if you look at Twitter where they were 5-6 years ago, that are technology firms or even consumer products firms that don't want to go it alone either, right? They want an earlier monetization event, and there's a lot of cash and a lot of money out there willing to bring them into the fold and take that inorganic growth. And so I think the motivation of individual investors is something that's hard to predict why they're doing it. But I think overall the market wants growth, and M&A is a great vehicle for that.
Okay, and do you see much? I mean, U.S. companies merging with U.S. companies. Do you see much of an increase in U.S. companies looking to Europe for expansion, or vice versa?
Well, we've seen an increasing trend in cross-border deal activity globally. Really, everyone is looking beyond, and as I mentioned, as that social deal-making platform we've built, the reason is because people are looking beyond their own borders. I mean, what's interesting is we've seen a lot of, foreign investors and buyers looking at U.S. assets recently. We've seen a significant increase in the number of buyer participants making it in the due diligence stage, looking at U.S. assets. But the same trend, we saw, this big increase. I mentioned 35% year over year in EMEA. Those European deals. There's a lot of U.S. firms looking, especially large firms who don't want to repatriate some of the money they've made abroad. They're looking to just buy assets that are undervalued. Europe's been beaten down. The valuation expectations are more reasonable. And so U.S. buyers are keeping money abroad and buying European assets. Now, at some point, all the good assets are sort of off the table, and I think you'll see a pullback. But that's what's driven that significant increase that we saw, U.S. buyers into Europe.
Okay, so let's get a little more stock specific here. You have a high flying companies like Facebook, Netflix, and now Twitter. And these companies, I mean, they got to satisfy Wall Street and they need to grow, right? So they have their internal growth, but are they going to look outside and perhaps go out and overpay for that growth? And that was a trend that we saw, and I don't want to mention it now, but we saw that during the dot-com bubble. Do you think these high flyers that are so hungry for growth and so hungry to please Wall Street that they're going to go out and overpay in order to get the growth?
Well, they've got to deliver on that growth, and when you have valuations like we saw with Twitter yesterday, you can put capital to work, and I think for every Twitter, as I mentioned before, there's a ton of startups and Silicon Valley companies that look at the IPO prospect to not be what it used to be. For every one of those successful deals, there's a bunch that don't make it out, and probably should have sold out, to the Facebooks of the world earlier. And so I absolutely think you're going to see an increased trend of them buying, and when they all jump in the water, and they've got their stock is and cash positions to be able to go out buy companies, you'll see an increase in competition driving up valuations. I don't think it's going to get as out of control as it did in the past, but certainly you're going to see that. And I'll tell you right now, talking to our client base, some of these large tech firms, that were kind of sitting back and waiting, still doing their typical tuck-in acquisitions here and there. They're ramping up, and they're even using our technology platform to plan and think about how they go after and target some companies that aren't on the market but should be. So.
And this is overall, I mean, obviously you've been doing this for a few years, and you've seen the ebb and flow in the U.S. economy. So, like during the financial crisis, was it a ghost town around your office? It was just, people just all locked up. And then, take it to the flip side now. The market's, flying high. People are looking for deals. Twitter's coming to IPO. I think Steven Ratner tweeted out yesterday that, if this is not a definition of another tech bubble, he doesn't know what is. Can you draw any comparisons on that, or is that really not fair?
Well, I mean, to address your first question about as the financial crisis hit, things the sort of traditional M&A route slowed down, but certainly our business was buoyed by the distressed activity. It got to a point where people had no choice, and all the bankruptcy restructuring work. We were pretty busy. We were actually extremely busy. And we helped with the bailout and the bad bank assets as well through the FDIC. But what's interesting is I think people hopefully have learned the lesson, and it's not too distant past that we probably won't get to that same level of craziness. But I certainly think some of these valuations are out of whack. I was just down in Houston. Speaking with a number of our energy clients, and and they were saying, even for some of the midstream assets, pipeline assets that they're selling, people have rolled up, a bunch of little pipeline, 20-year-old assets and tried to bill it as a new pipeline and want 5x what they used to get. So it's not just subjugated to the tech industry. It's really everywhere where people are trying to make gold out of metal. So.
Okay, we've had Matt Porzio on here, Vice President, M&A Strategy and Product Marketing at Intralinks, and he is definitely giving us a well-rounded perspective on his deal flow indicator and merger and activity in the U.S. markets and also worldwide. Well, Matt, thanks for being on. Great information, and hope we can have you on again.
Great, thanks for having me. Yeah, I'd love to come back.
Okay, have a good day.
All right.
And we're gonna go. We're gonna shift it over to Shaky Jake with some movers and some earnings.
Thanks, Joel. Figure I'll give you guys out there in the Options House room a quick look at what's moving out there in the markets today. We have talked about a few of the names. A lot of them are big earnings plays from yesterday. So I'm going to get started there. We had a lot of action in Groupon. Company reported earnings after the close. Closed at about 9.53, dropped as low as 8.31 on the earnings report, then rocketed upwards, making a high of 10.60 in the post-market trading. Absolutely crazy movement there. Company reported 2 cents on the bottom line versus the 1 cent estimate. Revenues come in at $595 million, far below the expectations of $616 million. There's some comments from Eric Lefkowski about that company's model and kind of blaming the drop in revenue on Gmail and the new system. I know they haven't fully rolled it out yet, but what it is, it's a multiple tab system where any mass email goes to one tab and then your personal emails go to another and social emails go to another. And since Groupon relies so much on coupon mailing, Lefkowski said that this is really hurting Groupon, so they're having to come up with a new way to deliver these deals, or at least find a way around Google's new email model. Brent, do you think that sounds like something that Groupon can get around? I mean, this just seems like, I don't know, it just seems kind of shaky to me.
Shaky Jake?
Perhaps.
I mean, they definitely cited that in the press release and on the call. As far as some kind of impact, your guess is as good as mine, really.
I mean, what are they going to do? Go to Google and say, you guys have to change Gmail? Because Google's not going to do it, especially not for Groupon, who spurned their acquisition offer. So
Yeah,
maybe
that's a great point, actually.
maybe Google's getting the last laugh here. Kind of interesting to watch that. Groupon's trading at 984 right now. It's made up most of its losses from last night, but it is off of the highs. So keep an eye on that one. It is up a little bit today from its close on Thursday. Another one we definitely have to watch again is Tesla. I know we just keep seeming like we're beating the dead horse here, but Tesla has been dropping the last couple of days. This is a momentum stock, not necessarily rational. Got to keep an eye on it. Made that high of 181.97 3 days ago in the post-market trading, has fallen heavily since, making a low of $134 in the pre-market when it was in thin volume. Has picked up quite a bit of volume since then and slowly kind of inched forward. It's at 137.44 right now, recovering, but still down from yesterday's close. Brent, what do you think we're going to see on Tesla today? And Joel, pop in anytime you want. I know that you guys kind of took a quick technical look at this, but I mean, I'm kind of zooming out on the chart, and it's breaking down here. A momentum stock with bad momentum just seems kind of scary to me.
Well, the car fires are never a good thing here, so we got to keep that in mind. Glad no one was hurt on those. Looking at the pre-market trading here, you kind of got a rounding bottom here. I mean, I know you got a lot of people short this issue, and that's something that you got to keep in mind. People have been sitting on shorts for a long time, so maybe using this opportunity. Now, looking at the pre-market activity, I like to use them as parameters. We were trading $3 lower here. We were traded down to 134. I had mentioned that on the daily charts back, I believe, in August, you had a low at 135 even. So as you move farther away from that level, I think it adds further significance to being a support level. So I'm looking for good support between 134 and 135. As you're just drifting up here on the 15-minute chart, you are making higher highs. So that is the trend. I would use the close of 139.70. 177 as a resistance point. Yesterday's high is another $5 away from that. But you got to keep the whole number theory in here. 140 is certainly a whole number that you're going to be approaching.
I actually had to do the math twice. I couldn't believe it the first time I did it. Tesla shares down 24% in the last 3 sessions.
That's absolutely
Holy
brutal.
cow.
That's a very Tesla-esque move there.
It's a very Momo-esque trade. I mean, you think that this thing ran up and then you look to the downside and it just gets clobbered on the downside. I think I don't remember if it was Joel or Dennis talking recently about you get a crazy rally to the upside, but the downside just whew, there it goes.
No kidding. Definitely going to be watching Tesla today, and keep an eye out for that continued drop. I know I put out a note today. I think the only thing that's going to stop it is going to be some bullish news of some kind. Whether it's going to be Elon Musk making bullish comments saying that this car fire is not a problem, or if it's an analyst coming in with a defense of their rating, or possibly upgrading the stock. I think that's the only thing that's going to really turn it around, since it is a momentum driver. But that's just my take. Being based in the news here. Another one I want us to take a look at real quick is Alcoa, ticker Alpha. Alpha company had a real rough trading session yesterday. It did receive a downgrade from Wellington Shields, dropping it to a hold. Company had a tough session, dropped right at the open pretty heavily, made a low of 888. It opened at, 959, so big drop there. It has been recovering ever since. It's fairly thin volume in the very early part of the session, but ever since then it's been kind of picking up. I'm seeing the last trade at 9.10 here, so it is above that $9 level now. So it will be interesting to see at the open if it can hang on there. Joel, what do you think here? I mean, Alcoa got beat up. This is one of the ones that they just got pulled out of the Dow, obviously, a couple of weeks ago. What do you think on Alcoa here?
Well, it had a ridiculous move from 860 up to almost $10, and once again, going back to that whole in round number theory, big institutional sellers would purchase that $10 level. Probably been there for a couple years. So once you get that you had the 997 high, and then the high frequency traders, perhaps the big offers come down in the book. Perhaps they jump down to 990, the following 2 days, because you made a high at 989 and 987. So that $10 level was protected. You had the bad news yesterday. Took it down under the $9 level. Currently trading at 908, trading up in the pre-market. What I would look for here, just to give you the quick high in the pre-market on Alcoa. Alcoa can't wait. Probably you guys are too young to remember that. That was one of their advertisements back.
What? Yeah, I don't know about that one.
You have to Google it. 915 was a high in the pre-market. What I'd be looking for buyers of Alcoa is you want to see it hold this $9 level. You got down to 888 yesterday. Now you're back over 895 close. The best thing would be to see that pattern that you can't, because I can't bring up Alcoa on the chart here, but the similar pattern that you had on the upside here near the $10 level. You'd like to see a series of lows around the $9 level. It doesn't have to be 888 exactly, but that's what you want to see in order to get the move going back up north. Just going back, we were talking about the Tesla and the old saying, what a bull eats in a year, a bear scarfs in a day, and that's what you're having here. I mean, you're getting negative momentum to the downside here. People have been holding on this stock for a long time, thinking it's going 200. It got pretty close to it. I mean, they don't sell that many cars, so if the ones they're selling are catching on fire, that's not a good thing. But we'll see. I mean, we had Andy Swan on yesterday, who's an active investor, uses social media to predict different trends, and he was kind of looking at this as an opportunity, perhaps to to look at the stock from the long side here. The technical formations right now that we're seeing don't warrant that kind of activity, but we'll see. We'll see if we can get a couple lows in the same area, a little bit of consolidation. But for right now, the trend is down, and you got to respect that.
I know something else we may want to take a look at while we're talking about talking about Tesla is Solar City. Elon Musk's other play, it has been following a very similar trend, has been dropping pretty heavily over the last couple of sessions. What was that? 4 sessions ago, it made a high of 65.30. It is now down to 49.56. It's dropped over $15 in across 4 sessions. Pretty brutal there. Solar City did have earnings fairly recently, so I'll pull those up for you guys real quick. But I mean, Solar City really getting crushed. It tends to trade with that Elon Musk premium. So if Tesla is on the rise, and Solar City tends to be. But Solar City did post a narrower than expected loss of 43 cents versus 44 cents expected. This was back on the 6th. But they did beat on the top line as well, 48.6 million versus expected 42.52 million. Now, this company and Tesla both heavily rely on government credits for their profit, and I know there were a lot of analysts out there saying that now they decide to focus on whether or not these credits could get pulled, not when they're rallying hard, but I guess you got to see what could be going on the bear side. But Solar City really coming down, kind of leveling out around that 49. Above $49, but still below 50. Could be interesting to watch today. Joel, this chart just seems to be breaking down over the past 3 sessions. What do you see here?
Well, I'm the eternal bull, eternal bear. Whatever way I feel swinging here. But I do see a technical pattern here that I do like to pay attention to. I've had a move from the $35 level up to 65, 30-point move, 50% retracement, 15. That takes you down to the $50 level. You Solar City Bulls, you need this to hold this $50 level here over the next few sessions to get perhaps get a little boom back up to the 55, 56 area. If in fact you can't get that magical close over the $50 level here, you're going to be going down to 45 in a heartbeat. So the market is open for business here. The S&Ps had a big dip off the employment number, and if anybody was listening to Adam Button here, he actually thought the unemployment numbers were pretty good, and he was a little bit surprised at the sell-off. So good call there by Adam.
I was a little surprised too. I mean, a lot better than expected. The revisions were higher. Market didn't like it.
The fickle market here. Okay,
Right.
let's move on to Twitter here. What a rise here in the pre-market. Let's get to all the pre-market trading here for Twitter. They took it down under the $44 level and got a nice bounce here. Opens under 46, 45.93, but just getting a bounce here. The level that I'm looking at here, your mid-range level from yesterday in shares of Twitter, 46.33. That's the number I'm looking at. We've got the 46.20. If in fact we can get above 46.33, hold that during the first bracket here, I think we can get up to some of the intraday resistance that we had. I believe we got all the way up to 48.5 before we sold off late in the day here. So you Twitter fans here, I'd like to see it hold that 46.30 level. Then we can get back up. Really fell off a cliff from the 48.50 level. That's when the market kind of sold off too. So trading at an important level here for Twitter after a pretty big pre-market trading. Moving on to some of our other movers here. Priceline. Don't call it $150 pre-market range because it was like 120. But Priceline right back up here, trading up a smart $43 here. Boy, look at the daily chart here for this issue and see if it's possible to find any resistance in this thing. I don't know if you want to find resistance in it. Priceline here now $120 off the pre-market low of 945. Going into the daily charts here, yesterday's high in the issue was 1062.60. We got up to 1067. So just like to see it hold this 1062 level. Get back up the high that you had on Tuesday was 1085. So that's another $20 away from here. Twitter up $1.72 here. People are waking up and buying Twitter here. We closed the 46, got over 46.30 here. I'd still like to see that level hold here, at least for the first 15 minutes to confirm and move back up to the 48 handle. Taking a look at some other issues here. Groupon had some earnings today. Had a wild ride in the pre-market. Interesting to look at Groupon here on the daily charts. Yesterday's high in Groupon was 997, and we were hanging up right near that area in the pre-market, but we've only gotten a 983 here in the regular sessions. Starting to sell off a bit, so that resistance moving down to the $10 level here in shares of Groupon. Traders should also take note of yesterday's low in the issue at 940. So that would be a couple levels to look at in Groupon here.
Joel, we got some action in Sun Edison this morning. Sandy Uniform, November Echo. JH3's been trading this one. I see Citigroup did boost their price target on Sun Edison from $11 to $21. Wow.
This stock gets some love on Benzinga's pre-market info here. We didn't talk about it earlier. It did clear yesterday's high, which was 1137. Got to 1147, but we've pulled right back here. So keep an eye at perhaps that whole $1150 should be resistance. The recent high of the move was 1175. Coming back, we're right back at the low. Did they just come out with that upgrade, or was that out during the pre-market?
City, that was in the pre-market. I mean, that's 20. We're trading at $11 up to 21. That's some notable upside with the stock up 20% in since November, at the beginning of November.
Okay.
That is the street high price target on Sun Edison too, just to note.
Okay, Twitter here up a $1.89 here, 46.90 high. We'll see if there's any resistance at the $47 level. Nice round number there to perhaps slow the momentum here. Looking at Twitter from the pre-market trading from yesterday, didn't fall off a cliff until the market got weak. I believe it was up at the 48.50 level. Little bit ways to go before you get to there, but approaching 47. If you're looking at the New York book, you can see if there's any large orders sitting at that level. S&P's in the green here, trading up a buck and a quarter, 1746 and a half, puts you up on the day. Pre-market high at 1751. In order to keep the momentum going here, like to see us hold that close. It's 1745 and a quarter. Might have been some orders there at 47 in Twitter. We got up to 46.94. Pulled back almost a buck there. I just saw a 46.19 print. So now we're going to be under 46 here in a second. Price line up $42, 1068 here. No major resistance in that issue until 1085. Interesting chart here for the House of Mouse. Really dipped in the pre-market, I believe under $65, but hanging in here during the regular session. Looking at shares of Disney here, wow, 67.91. So it ended after trading down in the pre-market. The stock ended opening up, and at 67.91 has been the high. Back down at the low. We have taken out yesterday's low. Some momentum on the downside here. 66 evens major support. Well, if you're playing Twitter here, you better keep your eye on the on the screen here. Almost a 2-point range here in the issue in early trading. Just a few seconds ago, we were back up at the $47 level. Now we have dipped down, just made a recent low at 45.17. Keep an eye on that 44 $45 level. You had a 44.90 close yesterday. That's your support level. Below that, be looking at $44. So pretty good. I wonder if Dennis is getting dirty here in that Twitter. Be tweeting out some levels on that issue as soon as we get done with our broadcast today.
Joel, I got the charts up of the three big name companies which reported earnings last night. Groupon, Disney, Priceline. Huge swings lower and huge swings higher. A whole lot of dollars in the ranges there. Do you make anything of this when you see kind of reactions like this? I mean, whether it's on an earnings release or whether it's on some other news item. I mean, what does this volatility mean for you for your trades?
Oh, boy, I tell you, a lot of times on earnings days or some of the days that I may, look, to stay away from the issue, I think what you have is you have a lot of people that do sophisticated quantitative analysis, and when they get fundamental analysis, as such as earnings and whatnot, they put it in their models, and if the models say buy, they buy, and if the models say sell, they sell, and they are strictly based, they don't look at charts here as much as we do. Twitter below the close here of 44.90. Wow, $2 drop here in shares of Twitter. Moving towards the low from yesterday. That's the only low you have at the $44 level. We'll be keeping an eye on that. TWTR did trade lower in the pre-market. Looks like that 44 is going to go by the wayside here pretty quickly. Coming up on the low from Twitter yesterday, $44 in the pre-market. We did hit a low of 43.62. 42.22 is the low, getting a 50-cent bounce here. So $44 level be defended a little bit here by perhaps some of the underwriters. Let's take a look at shares of Alcoa. The news didn't last for very long here. It's opened up above the $9 level. We have taken out yesterday's low at 888, making a low at 884 here. Don't like when you get some good news and you get a up opening and then and it doesn't hold. So now the offers will be growing at the $9 level. We all remember that 864 level. That was basically a triple top, and then you had it busted through there and ended up rallying. So if you want to be patient here, let's keep an eye on the 864 level here in shares of Alcoa. Twitter coming down, going to knock on that $44 level. Brent, you think it's going to hold here? Or are we going to go down to that pre-market low of 43.62?
I mean, momentum just to the downside right now. I feel like it's going to touch the 44. 44.09, I seen 44.08. It's kind of bouncing now, but downside momentum. I feel bad for shares of Facebook this morning. You have totally neglected shares of Facebook, I feel like. Twitter, we get another social network traded on the exchange, and forget about Facebook.
Okay, let's see if I can like the Facebook chart here. We were talking about some daily levels in Facebook here. Let's take a look. I think there was a bunch of lows. We are below $44, Brent. Good call there on the Twitter.
And the downside, just momentum. 43.06 or 43.60 right now. Just blew through that 44 level.
Right, but 43.62 pre-market low here. We are finding some temporary support in the issue right here at the pre-market low. Below that, folks, $40 maybe, I don't know, but I'd be looking for perhaps a little bit of a bounce here off this 43.50 level. Come on, Twitter, don't make me look bad. What about you're talking about here the Facebook, and boy, you talk about a stock sitting on a critical level. I'm glad you brought that to my attention here. 47.30 was yesterday's low. 47.48 the low in today's trading. Go back a few more days here. 47.50 was the low. Facebook has to hold in here, right here at this 47.50 level, or else we could go down and see the low on earnings day here. The low on earnings day was at 46.50. Just a quick note from Dennis here, taking a look at some of the financials. He says these financials are strong here. Let's take a look at some of the financials, how they're trading. Let's see, Goldman Sachs. We'll see if we can get a quick read on that issue on the daily chart. That's finding support at the 160 level. Dennis is also seeing strength here in shares of JP Morgan, JPM. JP Morgan trading up on the session here, trying to clear some resistance. Did have a double top at 42.34. We're trading at 42.48, so getting a move to the upside here. Twitter, so much for that pre-market low at 43.50. We are now under $43 here in Twitter. Oh no, we could. Dennis and I were joking about going for the $40 level, but could be on the radar here. Shares of Twitter trading down over $2 in the pre-market, $4 range here. Let's just take a note that it had a 6-point range yesterday. So if you project 6 points off that 46.94 high, that could take you down to 40.94. Let's call 41 a target here in Twitter, ahead of that nice round number of 40. Going back to the financials here, JP Morgan up 85 cents on the session. A 1-day decline in shares of Wells Fargo here, back up in the 42 handle here, 42.17. Opened up. There's an interesting formation if you're using daily highs and lows. It closed on its low of the day at 41.71. That was low tick, probably a big sell imbalance. Opened up right at that level and just turned around on a dime here, trading at 42.18 at the high of the day. So no major resistance until you get a little bit higher up here at 42.50. A couple of the insurers are looking strong here. MetLife. Got another saying for MetLife. Get Met, it pays, right? Isn't that their saying?
I thought so, yes.
Guys are getting tired of all my stupid sayings here. That's
No way, Joe. Come on. Don't do that to me.
okay. Taking a look at Met here, we could be approaching some resistance of 49.68 high. I'd like to alert our traders to the 49.81 high that you had on October 22nd. We're only a dime away from there, so we'll be keeping an eye on that level.
Joel, check out the S&P really quick before we close the show.
Okay, back up pre-market high 1751. That's your resistance level. Not a lot of resistance in the 1750. So wild ride this morning. Couple great interviews. Hope your day is going well. Have a good weekend. Go Blue. We'll be back with you on Monday.
9:45. Let's do it.
Yes.